Welcome, guys. This is basically going to be a backtest of the Nasdaq. Yes, last week, because a lot of traders were complaining that the price action was choppy and there were no trades, so all sort of things. So there was like two good setups and few setups that ran about 100 to 200 points. So we'll go through each one. So let's start from Monday. So if you go Monday, this is the ES chart. So Nasdaq didn't take the London highs. ES took the London highs. So there's an SMT here. So if we go to 5 minute, there's an FVG here. Sorry, there's a 15-minute FVG here. You could have taken the entry from there. It was not clean at it was not the cleanest setup, but it ran about 190 points. So on Tuesday, there was a 15-minute charge in NS and Q, and ES didn't take the 15-minute low. So there's a SMT again. From there, you had an entry from the 5 minute. So it ran about 200 points, and the cleanest setup was on Wednesday from the 15-minute fair value gap from here. I will talk about this setup. I'm just going through the setup, the criteria. So if you take Wednesday, the London highs were taken out by ES and NQ held it. So there was an SMT again. And Thursday there was an SMT, 15-minute taken out by ES and NQ held it. And from this FVG could have taken the trade. It consolidated for about wire, but it ran about 200 points. And Friday, one of the cleanest days, there was a 1 hour FVG here. I took this short. I missed this long, but I shorted this again. So the Friday price actions are different than the other days. It takes out both highs and lows, and it's the profile that runs on Fridays usually. So if you are a trader who doesn't trade Fridays as a trading day or count it as a trading day, if it's not your trading day, that's fine. Usually I trade one setup on Fridays, but this Friday was too clean to it was a good Friday, to be really honest. So what I wanted to talk about was Wednesday. So my trading setup, usually I wait for the SMT, I wait for the IOF to be formed, and then I take the 1 minute entry. So I'll come from the Mondays. So if you take Monday, there was a chart here, but it was from like 120 points from the high. So I didn't take this trade. I didn't take this either. I waited for the best day. So Tuesday, there was a trade from here. I didn't take it because it was there was an SMT, but it didn't run. It didn't give us a fair value gap or whatever it is in the higher time frame, so I didn't take it. There was a different reason for this as well. So I waited for this sell. There was 15-minute FVG and 1-minute IFVG plus FVG, so you could have taken the trade from here, or from here, and it ran about 500 points. Yeah. And in the evening session, there was a trade. It was basically 1 minute and 5 minutes. So you could have taken this from here, from this break block, and ran towards, it ran about 200 points. I didn't take this trade. And on Friday, this was one of the cleanest setups that I've seen throughout the week. There was a 50-minute break block here, and OB to OB, it took out these London highs and gave us the entry from this 1-minute IFVG. So I took this from here, and it ran towards here. So I took the profits, and there was a buy trade from here. You could have taken this from the 5-minute as well, but it ran about 300 points, and it came back to the institutional order flow. So in the evening session, why I took this trade was we had a 5-minute MSS fair value gap. There was a fair value gap as well, and this is an order flow break block plus entry, and I took it from here, from this FVG, and ran towards here. So those are the 3 trades that I took this week. I'm sorry. So what I wanted to talk to you was not the increase, nor the trading style or anything else, but I wanted to talk about the psychology behind these market conditions. Like if you take the previous 3 weeks, price action was not that good. I accept it. There was a lot of wicks, and there was a lot of consolidations. As far as you guys know, this is Q2, and we are in the last 2 weeks. Q2 basically is all about manipulations. So I personally anticipated that the price action is going to be choppy, because it should create liquidity and then break liquidity and run towards the yearly distribution. So when you complain that the price action was choppy and it's difficult to trade, it's basically based on your system. Like I've seen a lot of traders, beginners especially, and some traders who have experience also in the markets. So I've been trading for 10 years now. I've seen a lot of traders spend 1 or 2 years in learning this scale, and then another 2 to 3 months in developing a system, strategy, and all the criteria for them to trade. But when they start trading, what they miss is they don't trade the system. If on a specific day or week you don't have all the criteria in your system, don't trade that. It's just simple as that. If I'm to trade, I need and SMT, IOF, IFVG, FVG, and then only I go to the 5 minute, 1 minute, and I take the trade. So if my setup is not there, let's assume that the SMT is not there, so I don't trade that day. It's just simple. Rather than taking losses on the days which market consolidates, it's better to avoid them and trade on the day that you have your setup. So basically, I didn't want to take Nasdaq buy trades until I see this low is being taken out or it runs towards this FVG. Because it should take this low out. It should come down here and then go up, or it should reach this FVG and go up. So until I see that, I will not trade any buy trades because it's going to be a counter trade, and not on a day like when you have IOF and the setup it like this. If I was there when this happened, I possibly will take this trade, but not on a day like this. Now, some of you will think, how would you know that the day is going to be like this? Usually, if you go back the last 2 weeks, Mondays and Fridays were choppy as hell. So you better avoid those 2 days. So I have my data. I've back tested about 4 years. So I know exactly, not exactly, averagely how much Nasdaq will run on a specific day. I will tell you now. On Mondays, it had run about 287 points averagely. And Tuesday, it was around 200 points. Wednesday, it was around 400 points. Thursday, it was around 470 points. Friday was around 150 points. But I'm not telling you that the exact numbers will appear in future, but it could possibly give you an information what to expect in the market. So if the price runs about 500 points on Wednesday, don't expect the price to run for about another 500 on the New York session itself. It ran because on Thursday, you see, when New York opens, it had already run about 355 points. So you expecting this to run about another 300 points? It will run, but it's going to be a tough game. Trust me, I don't want to take that risk because this trade is enough for the entire week. And Friday, because Monday was choppy, Tuesday was choppy, Thursday was choppy. So I was hoping something like to appear on Friday. Actually, I didn't think much uh, about the morning session, but I thought it would run in the London session. So I waited for something in London. So this appeared and I traded this, and I missed the total buy trade. I was really sad about it, but I traded this. So that's enough for the day, and that's enough for the week. So there are like four real reasons that you lose. What we call the four main emotional killers. One is fear of missing out. When Monday is consolidating, Tuesday is consolidating, people are complaining because they fear that they won't have any setups in the future, in the upcoming 3 days. Yeah. and then the greed and fear and revenge trading. So most of the people think that, take my word, there'll be 2 good days. There will be 2 good days per week, at least in difficult times like this. You will at least have 2 days to wait for those 2 days and trade. Manage your risk and trade. Trading is a game of waiting, and when your setup appears, don't think twice to enter. It could give you a loss, it could give you a profit. Doesn't matter of the outcome. You just have to enter. And there are 2 things that I have to talk in this video. One is the subtle cognitive biases, which you have to deconstruct. One is recency bias, which means when you are in a losing streak, people tend to think that your strategy is broken. It causes you to irrationally dump a winning system. And the other one is the confirmation bias, actively seeking for news articles, charts, or tweets that validate your open trade while entirely ignoring the massive red flags or the technical analysis right in front of you. So let me tell you this. In real life, we're trained that effort equals control and mistakes equals failure. In trading, you can't control the market no matter how hard you try. The perfect setup can still result in a loss. You have to teach yourself that taking a loss according to your plan isn't a failure. It's just a regular cost of doing business. So what my recommendation is to you guys, before you enter to a trade, run a pre-flight checklist. Have a checklist for your entire setup. Run it and then enter. If you experience an emotional spike, like after winning, after losing, just walk out, stay for like 15 to 30 minutes, then come back and trade again. Don't trade like, you can be a good trader who had a lot of winning streaks, but still, you have to give yourself some time to relax and then trade. Think about this. What if I told you that the rules that helped you succeed in school and your career are the exact reasons you're losing money in the markets? Think about it. That's it for today, guys. Have a good weekend.